Good afternoon, everyone. I'm going to do an update on the chart of the gold futures, and we're looking here at a weekly chart, but we're going all the way back to 1998. So the reason is because I wanted to emphasize the uptrend or the parabolic uptrend that the gold has been in. Now, the last time that we saw a significant pullback was around this area, which was in back in 2008, um, and this was more or less an easier pullback to analyze, and to say that we were gonna move to higher prices in gold because it was very fast, very steep, very violent, and things got to the extreme very quickly. So we're able to say that, yeah, this is just a pullback because people are just taking um, some money off the table, or whatnot. Now, since last year, we've been in this consolidation pattern. Now we've broken out of this uptrend channel, but we haven't broken out of this trend channel with conviction. So we've broken out of this uptrend channel more with time. And let me go ahead and zoom in, because you can see in this triangle there's more or less a almost like a symmetrical triangle, and you know what happens with asymmetrical triangles. You consolidate, and most of the time we we break out in the direction that we came from. So in this case, I still believe that the breakout is going to be to the upside, although quite a few people said that okay, we've had quite a few bearish crosses from the moving averages, like you can see here, the 13 and 34, and we're out of the uptrend channel and whatnot. Here's what I see. Okay, just take a quick look at my analysis right here, where you see a kind of like what's called a zigzag in the Elliot Wave analysis, and what you have here is a W, X, and Y, and I want you to take a look at this real quick, and I'm going to pause this and show you how another chart real quick. Alright, so this is the other chart that I'm looking at, and I'm looking at an actual book, textbook, and if you can see, it's almost exactly the same that we see, that has happened for the gold channel, or the gold consolidation type, where you see an ABC down, and then you have the W, and then you have a move up, you have the X, and then you have a consolidation. And according to this textbook, it is going to resolve to the move to a higher move, break out of this to a higher move. Now let's go ahead and go back to the chart, and many things are telling me, not only from my analysis and from the book, that this will resolve to higher prices. Let's also look at this real quick, because we haven't really seen any bearish divergence from the MACD. You see the highs of the MACD moving averages with the highs in price. That tells me right there that it's we are still on a move higher. We're going to go on a move higher. Now the consolidation has also been with lighter volume, so still that's another sign that is telling me that we're going to be moving to the higher prices. Now the trick here is to actually find to try to see where E is going to be. Now we may have a lower E where we break once if we break the low here from A, we will definitely be going to a lower low, but we'll still be looking for I'm still going to be looking for a higher breakout. Now another this is going to be another chart, another reason why I think we're going to be resolving to the higher prices. If we look at the dollar index, and if I can hold on. All right, so this is the dollar index, and I'm looking at the monthly chart because here in the monthly chart you can actually see the move um, a little easier, where you have the 1-2 from Elliot Wave. This is going to be the 3-4, where the 4 is actually going to be a flat zigzag, similar to what's going on in the gold sector. And before we move to a lower price, we're definitely going to be breaking the 71.05 low. But again, people are saying we're breaking this downtrend line, which we have, but I do believe that this is going to be a fake breakout. It is taking a little bit longer time because we are this is a monthly chart. Even if you go to a weekly chart, you can definitely see that you're starting to see some you're starting to see the decrease in volume, and you're starting to see the uh, the the, um, the reversal, I guess, or the it's actually faulting on the actual levels, price levels. So another and lastly, that the last thing that I want to show was the actual where you can, when you see the volume. I'm sorry, the MACD, the moving averages of the MACD, you can see that it still hasn't have a strong move or a right here. You can't see a strong enough move of the moving averages to that tells me that this is going to be resolving to higher prices. We haven't broken above this downtrend line from the MACD moving averages, and to me that just shows there's a weakness out of this last move that we've had um, to the 80 levels, to above the 80 levels, and more than likely we will have to see as a push to higher prices, even a definite higher prices with volume, which you can see right here that the volume has been contracting even way back from the April time frame. Even the last in our last leg up, which I would call this almost like a fifth wave up, we're looking at contraction of volume. Today, if you look at the daily chart, today what Bernanke um, and company, I should say, Mr. Fed has said it didn't give the dollar and sufficient strength to break out of this consolidation, supposedly consolidation. Now, what we've had instead was a tail, and to me, that's going to be more of lower prices. We're going to be breaking down a little bit more, and if we can't sustain this area, if we can't sustain this levels of the dollar, we're going to be breaking down fast and furious. Now, uh, again, this is all looking at a longer term picture, But even with the longer term picture in mind, um, uh, looking here at the weekly chart, because this has been going on since September or last year, so almost a whole year of consolidation. Um, I still think that we are not very far away from um, we're not very far away from resolving this pattern, or resolving um, the breakout one way or another. So I hope you enjoyed this, and until next time, thank you for listening. This is directionalanalysis.com.